Hello there, and welcome to a new issue of the Indicator Spotlight. About once a month, we feature a indicator from our NinjaTrader 8 library. Short little video, about 10 minutes, with a brief explanation of the main indicator concept, the most important functions, and how you can use this in a trading setup, along, of course, with a free download link to the indicator that we're talking about. And this time around, it's the squeeze channel addressing a frequently discussed setup that occurs in range-bound and low volatility scenarios. So it's a calm before the storm type situation where the market is building up momentum for the next major move, higher or lower. And today we'll discuss three different variations of the setup. First up, one described by John Bollinger in his book Bollinger on Bollinger Bands. So that is a low volatility squeeze. And then we have what John F. Carter outlines in his book on Mastering the Trade. That is more of a consolidation squeeze. And then finally, the squeeze channel from our library includes a full squeeze setup, which is a combination of both the Bollinger and Carter squeeze occurring at the same time. And so first up here, we'll talk a little bit about the Bollinger squeeze. Briefly, the Bollinger bands display standard deviation levels above and below a moving average. So the bands widen during periods of high volatility, as we see here, and narrow during less volatile periods. And a Bollinger squeeze occurs when the bandwidth or the standard deviation reaches a minimum for a 120 bar look-back period. And then Bollinger suggests different methods for identifying the direction of the breakouts. So, for example, using a relative strength index, RSI, together with a volume-based indicator. As for Carter's approach, that compares the Bollinger bands with the Keltner channel. So if the Bollinger bands narrow in width to a point where they are inside the Keltner channel, it constitutes a Carter squeeze, or a Bollinger-Keltner squeeze, we can also call it. Basically, comparing the true range volatility with the directional volatility here. And therefore, it is not necessarily a low volatility setup. So what we see here is not low volatility. Obviously, this is a consolidating or sideways market, but it's certainly not low volatility. And for the breakout, Carter looks at when the Bollinger bands move back outside the Keltner channel, and then validating these setups by using a 13 bar momentum period. That's what he used in his setup. And then finally, we have the full squeeze added here to this squeeze channel, where both the Bollinger and Carter squeeze situations occur at the same time. We see here the squeeze dots. Those are indicating the setup. And so to validate these setups, all of the setups that are included here, the Bollinger, Carter, and the full squeeze, they have to be aligned with a two momentum periods, 10 and 25 bars. And also, in order to eliminate distortions from the look-back period and reduce the number of noise signals, we're using a balanced momentum calculation here. And we also use price action or thrust bars to confirm the setups here. And so that is what we see here, a up thrust bar with a close above the high of the previous bar. For a down scenario, it would be a close below the low of the previous bar. And this indicator also comes with a couple of options to filter your signals. So we've set a minimum duration of the squeeze here to be 3 bars. So it needs to be at least 3 squeeze dots here before it's a valid setup. And then this price action requirement here has to occur within 6 bars following the completion of the squeeze, and of course be aligned with the momentum. And yeah, those are some filters that you can adjust via the indicator and dialog box. Also, there are 2 versions of this indicator in the library. So far, we've looked at the squeeze channel, which displays, well, the channel, obviously, and then there is a version that displays the squeeze dots and setups. In the lower panel here, we see the blue dots here signaling a Bollinger Squeeze. And when we see these yellow dots, that means that we have a combination of the Keltner and the Bollinger Squeeze at the same time. And if you just have a Keltner Squeeze, then you will have magenta dots. And then we have the histogram bars here. The light blue bars signal the volatility that you're currently seeing in the market, and then the dark blue bars here, they indicate the trend strength. You can also, of course, combine this squeeze indicator with other information that you might want to look at, say key support and resistance levels. And that's where this second panel here comes in handy. You'll have more space and a tidier chart to look at this. So what I've put on here is the daily range projections that were discussed in the last indicator spotlight. So a brief recap of that is that the daily range projections display support and resistance levels based on the volatility of the prior end days. So here we have a 20-bar look-back period. And so these gray bands here show us how far noise traders are typically able to drive prices. And we see a failed breakout here. Consolidation and low volatility, the market rolling over. We get a squeeze signal here, and then we hit the lower noise band level, retracement back up to the open and yesterday's close area, and then all the way down to the average daily range of the last 20 days, hitting the lower target here. And so this second version of the squeeze channel is pretty useful for combining with other indicators that you might want to look at. So the free download here today is the squeeze channel that I've talked about. You'll find that here in the volatility category, as well as in the channel indicator category. Members also have access to this other version of the indicator here, the squeeze. And all of the indicators here are available for a one-time fee of $150. There are about 120 indicators in here at this point. And it's a one-time fee, not a monthly fee or anything like that. And yeah, the free download here today is located here. So just click your way through here to the bottom of the post, and you will be able to find that. So that will include the presentation here today. Appreciate you taking the time and tuning in. Please leave me a comment on the video below here to give me some feedback. thumbs up or pass it along to a trading buddy. That would be greatly appreciated. You can do that via Facebook, Twitter, Google+, or just forward via email. Thanks again for checking in. Have a great rest of the week, and I look forward to hearing from you sometime soon.